Okay, guys, I want to talk about my selling credit spread strategy journey I'm very excited. As you guys know in the Discord, I'm really hyped about it because it's the one strategy that you can make income every day. And with this unique strategy, how you find the trend with the 15-minute orb, and then how do you go way out of the money and have the best chances? I'm going to go over all that, the do's and don'ts so far in my journey, and the days that I have lost and all that. So for the selling credit spread strategy, it works best on SPY. So I'll probably be just focusing on SPY. On I did IWM, and the premium is just not as good, and you can't go as far as out. Whereas on SPY, I've noticed that they're gonna all kind of move together. So I'm gonna stick to SPY based on the premium, and with this strategy is I'm going to go over the whole thing. So if you are used to watching this, but I'm going to do this for the new people too. But basically, all we look for to determine the trend is the first 945 candle, okay? And if you find that trend, selling credit spreads is super, super easy because it doesn't matter if it does this kind of movement, right? It can go up, it can go down, it can go, as long as it don't do a massive V shape where it goes all the way down and then it just goes all the way up, right? So this day here is bear calls, and I'll explain that term here in a brief second. So basically, we draw the first horizontal line at the very low of this 945, and I'm going to get rid of these EMAs since we aren't really using them for this strategy. It's for my other strategies. So you look at this first 945 candle, right? And I'll get rid of everything so you can see how clear this is. So this is your first 945. If you get price, a body below or above, that determines your trend. And you can see clearly at 10 o'clock, you have a body of a candle. So I say bear calls because we are bearish, hence the term bear in it. And so you will be selling calls to a buyer. And so when I took this trade, I go to 0 DTE right here, and I go far out of the money. We go vertical right in here, and we go as far as out of the money as possible to around 6 cents. Okay. Obviously, these aren't going to have any value since this day is expired, but that's the nature of it. So we'll have to use the next thing right here. So let's do 1 DTE. So we'll do vertical. We're going to do 30. Now, there has been a thing that we have been testing for the width. It is best if you keep it at 1, okay? We have tested 2. 2 is not going to be worth it. Basically, if you go from a width of 1 to 2, it's just double the money that you're putting into it. So if I do 10 contracts at a width of 1, it'll cost me 1,000. But if I do 10 at a width of 2, it'll cost me $2,000 for the same 10 contracts. So in the back test, stick to a width of 1, okay? And then we look for the price to be as close as possible to 6 cents. And you can see right here is the 6 cents you can see right here in the bid. You have the bid and then the ask, right? So right in here, I would actually look to take this one if this was the strike I was going to choose. And that's really what I'm looking for. I'm trying to get as close as possible to 6 cents. Sometimes I take 5 cents. So, if we see a setup right in here and I'm getting bear calls, I immediately look to get to bear calls like a minute or two before this closes. Because if I see it this far down, it's probably not going to close inside this orb. So that's a little tactic that I have been doing. I will look at around, this is at 10 o'clock. I'll be like 9:58, 9:59. I'm going to look to get to bear calls. So, and you can see how beautiful this spotted the trend. We went up, which is totally fine. Went inside the orb. It couldn't break above here and do bull puts, which is the upper resistance, and it just came crashing down. This is all we needed. When it did this, it didn't matter if it went all the way back up here. My premium was worthless, pretty much the whole day. The price would have to go all the way up in here, and you can see the premiums I took on day trade alerts. I took this one. Ignore the 2 spread. We tried out the 2 spread, but I did 590 here. So if price don't come close to your sell leg, you win. So price would have to go all the way up to 590, which is way up in here. That is a massive move that it would have to make. So it would have to go all the way up in here. So here's the thing though, as price gets close to your strike during the time of the day, depending on the time of the day, your premium will go up, okay? So to keep that in mind, your premium goes up as price gets closer to your strike. But you also have theta working for you if price don't get, all throughout here, if you see this choppiness, that we love that. We just don't want extreme chops to the bear calls and bull puts side of things, okay? Okay, so the first thing first, things to avoid, right? I put in here day trading education. Look at this forexfactory.com. It's the easiest economic calendar to use. All you have to look for is red folders. And the only thing I use this for, as you can see, we had PPI at 8:30. I'm only using this for to see if there's anything at like 10 o'clock, 10 o'clock, 1 or 2. So let's go to the next day here. You can see on January 14th, let's go to up next. January 15th. Hit this little arrow here. So you can see we have CPI now. On this is Wednesday, January 15th. We have that. Oh, okay, no. Only look for USD. My bad. We have CPI though for the USD. So you look at the USD folder here, and you'll see that is at 8:30. But we don't care about that because we're not selling options till the market opens. So none of this really affects me. I don't see anything that would affect me. I see we have, something here, but none of these are red folders to affect me till, nothing. So once I look at that Forest Factory and I see that there's no USD folders that affect me, I know, okay, that's the first thing I can do credit spreads. If there's something at 2 o'clock, in my experience, I got wrecked because the price doesn't tend to have good price action. It can be very, very choppy because you're waiting for that news to happen. Here was the last day. Here's another day here. You can see how simple this strategy is. I won about 3 in a row recently here. You have right here, bull puts. Price comes back just like it did before, chops it up, and eventually goes up. Easy day. Bull puts, easily win. Let's do another day right in here. And you can see the accuracy of this strategy, and that's why I'm so ecstatic. Not all the time are you going to see, you just win. You're going to get a loss on this. And and I'm going to tell you guys what I do when I get a loss. So right here is 945, bear calls, chop, 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 and it goes down. Price has to make an substantial move. Remember, I'm going so far out of the money that if you look at this, if you look at the vertical here, you can see, like, let's say the current price is 582. I'm going so far out that I'm going way below here at the 594. And this is bear call. So price would have to jump, what is this, 12 bucks? I was actually looking at it. That was insane if I do that one. So 582 to 594, it would have to jump $12 to go in the money for my option. And basically, that's probably not going to happen. And I have another rule that I use that I want to show you. If we use FinViz, this is a really nice tool that I haven't really looked into much, and it's a very nice tool to use. Look at SPY on the average true range. You can see that the average range it moves right here is the ATR 14. So in the past 14 days, it moved on an average of $7.42. So SPY moving past $7 is extremely rare. So not only are you, just based on that fact alone, if you go $7 past a strike, you're probably going to be very safe just alone doing this strategy. So that's nice to know. But if let's say price opens up and we get a first one. Let's say this candle right in here, we get bear calls here, but it's down $7. I'd be very reluctant not to take bear calls because we're up past that average true range, okay? So if we are down more than $7, I'd be more hesitant to take bull puts, okay? That's the only thing I do the inverse to save us. Okay, next strategy, let's go to the next candle here. This is the next day. You can see this shaded area is extended hours. We can get rid of that if you don't want to see it. But I actually like to see the next days. So right in here, yeah, we did that. Okay, yeah, we already did that. Here's the next day. Right here is 9:45. Bear calls. Easy, easy, easy. So you can see this is about 5 days in a row you win. Right in here, you do bull puts, and so if you do it right here at the thing, I'm pretty sure you win because you can go way farther than down here. By the time theta kicks in, you win on this day. So it's very accurate. It's very nice to see right here, 9:45. You can see just like, I can just look at it. I'll put these in for your guys' reference, but you can see how this is a wick. Don't take it if it's a wick. You need to see a body close, okay? So you get your bull puts right here on this candle at 11:30, and you can see price keeps going up. So what I'm going to do is I'm going to stick to width of 1. I talked about this, and I'm always getting premium near 6 cents. For the people using IBKR, I notice the fees are higher. That's the downside of credit spreads. The fees are going to be higher. What you can't do is, if I get into a strike and I get it for 6 cents and it goes against me, you can sell it for 7 cents or 8 cents just to get that extra penny, to cover down that fee. So I do recommend that if you're using a IBKR and you're from Canada, if I sell it for 6 or 5 or 6, make sure you sell it for a penny higher. That way you cover down the fee, that extra fees that you guys got to pay. But other than that, this strategy really does work. Basically, what a credit spread is saying is you have a range. You're choosing a strike, you're selling a strike, and buying a strike. Your sell strike is the one you want to win, and you don't want price to go into your sell strike, okay? So for this example is bull puts, I want price to go up, so your strike you would choose would be way down in here, in this area. And so basically, you don't want price to come into these areas. And as you can see, it would have to do a big V-shaped turn. There is a thing called a double orb. What you're seeing is first orbs. I will show you a double orb, right? This is a day that is perfect for showing you now. You see this day right here, 9:45. And you guys, no strategy is perfect, right? Right in here, you get 10 o'clock bull puts. That is a bull put signal here right at 10 o'clock. So you should be buying bull puts. You should be bullish because we went above this 15-minute. We went above the orb. So you want to get in fast. Remember, you want to get in as fast as possible because the earlier you get in, the farther out you can go. So you get in right here, but price just plummets down, and that's totally fine. So price plummets down and it keeps going down, and this candle right here is your double orb. Double orb means that we basically went to the other side of the 15-minute, all right, and we closed with a body. So we have the 15-minute here, bull puts here because we closed above it, and then this 15-minute closed below this horizontal line. So that means it should be bear calls now. So in my do's and don'ts now, I am not going to hedge my position because I got burnt doing this last time. If I lose on a day on my first orb, I'm just going to take the loss. I am not going to try to get in bear calls right here because one, I've noticed it is later in the day when it's going to give you bear calls. This is 12:30, so time is everything when selling credit spreads. If you sell a credit spread at 12:30, it's not going to be as good as selling a credit spread at 10 o'clock. You want to get in as early as possible, but also you want to get the signal too. So this is a bear call day and a bull put day, right? It has two orbs. So basically that can mean one, it's an iron condor, it's just too choppy, or two, this was a fake out signal and the trend ended up being down, which is the case here. I lost on this day. So here's how you recover on the day. So if you take a loss, usually it takes about 2.25 of wins to make it back. Let's just say at 3 with the fees, right? Because with my stop, I forgot to talk about this. For my stop, I said in here, when I say in day trade alerts, I said, I tell you exactly when I sold. I sold the 06 premium, and I actually changed this one to 5 to hurry up and get in. I said my stop is always going to be 25 cents. I'm making that as a hard roll of 25 cents as my stop, just because I've seen as much backtest, I've seen price sometimes get to like 18 cents and drop down, get to 21 and drop down. I'm going to keep it at 25 cents where it's not too big of a loss, but it also gives you enough wiggle room. So if I sell it at 6 cents, right? And so 6 to 12 is 100% loss, 12 to 18 is a 200, 18 to 24 is a 300. So you're looking at 300 and a little change. So that gives you just that bit of wiggle room. Just like, hey, if it doesn't work out, I have a little bit of wiggle room, because I've seen many times where it does a double orb and you'll win if you give yourself a little wiggle room. 9 times out of the 10, though, you selling credit spreads, these options are expire worthless. But we don't want that one option to go in the money. If you let an option go in the money, let's say you put 2,000 into this trade, you will lose all 2,000, okay? That's why we don't want that to happen. This is a very safe strategy where you make minor gains, but it's very risky if you let it go in the money, okay? That's the one thing. Just don't want that to happen. So, yeah, this day you would lost because as you can see, it did an up move here and then just went plummeting down. We went from 591 to 580. That was $11 drop from the high. You definitely lost on that strategy. So here's what I'm going to do. I'm going to do 2 times the size, okay? If I did 20 contracts here, I sold 20 contracts, and for one spread, 20 contracts is going to cost you roughly $2 grand, a little less than $2 grand. So if you do this, Webull is a very nice thing to see. So if you do look at this, let's say you get in right here, this is your bid and the ask. Webull is very user friendly. I really like this. If you're looking for a broker, I would try this one. But remember, your limit price is always going to be set at 6 cents. You can do 5. Nothing less than 5. Okay, so if you look at this right in here, the easiest way to say how much you're going to spend. So if you do 20 contracts and you go to the graph, you can see your max, your P&L max loss is 1800 down here, and you can see your max win is 120. So you're risking 1880 dollars to make 120. But keep in mind, you're not going to lose 1880. We have a stop loss. So that stop loss is going to be 120, since we're doing a 300% stop loss, times that by 3, okay? So it's roughly going to be like 375 with fees, 380. Let's just call it 380, right? So that's how that works. I use the graph to kind of see out what I'm doing. But me personally, I do place my trades on Thinkorswim. I use the app to place the trade. It's very easy. It looks just like this. You have the bid, the ask, and all that. There's nothing really confusing about this at all. So if you click on the bid, it gets you right into sell side. You want to make sure you're on sell side. If it don't say credit, then you are buying a vertical. You never want to see buying, or debit. So that's what it's going to say. If it says buy, look for it here. I switched to buy, it says debit. You don't ever want to see that term. You want to switch to sell, and it should say credit. And then, like I said, the bid and the ask are the premiums here. We want to always get into 6 cents. When that 6 cents turns on the bid, that's when you can get filled instantly, okay? So, like I said, if I take a loss for 20 contracts, it's going to be 3 times what I gain. If I'm looking to gain 100, with 20 contracts, I would gain roughly $100, times that by 3 is my loss. So what I plan on doing, if I do 20 contracts, I'm looking to double my size for the next day. So I'll do 40 contracts. That way, my loss is recovered back in 2 days, and I actually make money on the second day. And so that's really the point I'm saying, because not a lot of times I can show you guys plenty examples of the win streaks on here. I just showed you like 5 or 6 days in a row of winning. The only days that I have lost is because I was being stupid. If I try to do a double orb, and just keep trying to fight it out, I lost. For example, I'll show you a time where I didn't look at the economic calendar, and it was super choppy. This was this day. It doesn't seem like I should have lost on this, but I did. Right in here, as you can see, is your bear calls. As you can see, we got bear calls here. They actually survived up in here, and I immediately did bull puts to hedge my position. My bull puts got immediately wrecked as it just did a swift kick, and then immediately went up. So I lost on this day because I tried to hedge my position. Hedging is not bad. It worked a lot. It works a lot, but the problem is you're getting in so late. This was 11:45, whereas I got my bear calls way back in here, that these bear calls actually won, even with these big moves going up and down like that. So keep in mind, me personally, I'm going to stick to one orb. Try to get in as early as possible. Once the signal gives you it, get in as fast. Like if you see like right in here is your 945, and you see that we're clearly, if we're clearly going above it, or like the minute you see this close right here, just hurry up and get in. You have this little wick to get you in, and then it goes up, right? And that's really what's going to give you that best strike price. But yeah, I'm going to do 2 times the size. If you sell 20 contracts, the minute you take a loss, you go to X2 the contracts, okay? So you'll do 40 contracts and 40 contracts for 2 days in a row. And then once you made back that one loss, you go back to your original size. That way, you don't lose on the 40 contracts, because you're going to eventually lose. There's going to be a time, but it's just not going to be often, okay? I'm looking at all these days, and it's just been beautiful. This one was an ATR 14. You see how we just went dramatically down over $7? You can see right in here, we dropped $9. So here's an example of where I would not take bear calls on the 945 candle. Hear me out. So we're dropping $9, and we get bear calls right here. Would I take bear calls if I know the average range of SPY moves is $7? No. I take bull puts, and it's an easy day, okay? So that's the one thing that you do have to ignore. If it gives you a signal and you're over the average true range that I showed you on FitViz, take the opposite, all right? Or don't look to take bear calls if you're down $9 on SPY. It doesn't make sense. 945 here, both bear calls, you win again. You're going to win a lot. That's the reason here. Backtest yourself, go to the first 15-minute candle, and you can say go as far out as the money as possible. Remember, we're going to 6 cents. I will post all my trade alerts into here. I'm going to always do one with, and you can see exactly how I showed you on Webull. You see the exact strike, you see put, you see on the sell side the credit, and you see the 2 legs. Remember, you're going to sell a leg and you're going to buy a leg. And you want the sell leg to win. And if you're confused about this, you can do it on paper trading, but it's super easy to do. You see right here, you have the bid and the ask, and I want, and I will tell you exactly what I'm selling for. 0.6 premium, and I told I did go bigger size on this one. So it's very, very easy to read. I think Weeble's the easiest, but I just wanted to go over the do's and don'ts. One, you got to pay attention to the ATR 14. What is the average move of SPY? Because if you get a signal and you're up $7, you should not be doing bear calls. If you're down 7, you should not be doing bull or bear calls if you're down, and if you're up 7, you shouldn't be doing bull puts. And then just follow the signal, all right? Don't try to do double orb. I tried it. The problem is the second orb you get in too late, okay? If you lose on a trade, it is totally fine. You can make that back easily. Just don't go so big size and be like, oh, I have $5,000 only, and I put all 5,000 in, and then when you need to leverage up, you can't. You actually have to leverage down. And that's the bad part, because then you're like, not only is it going to take you, it's going to take you more than 3 wins in a row to make that back, because now you got to scale down. So don't do that. I like to be conservative. You know, with this strategy, you conservatively make how much money you want to make every day. Okay, if you want to make a certain amount, just go on. You could go on Webull here. You can see, well, if I sell it for this amount, for example, if I sell for 6 cents, which is always what we're doing, and I do 10 contracts, it says a credit of $60. With fees, you're looking at like roughly $50. So with a $1,000 account, not even $1,000, $940, you can make $50. And if you, let's say you have a perfect win streak, it's not going to happen, times that by 20, you can make $1,000. Let's cut about $100 of profit, right? And, you know, realistically, $800 to $900 you can make in a month with only $1,000. So that's the purpose of this strategy, is to really just snowball it slowly and really just rack it up. Because once you turn that 1,000 to 2,000, then you can double your contracts now. And now you're making $100 compared to $50 a day. And that's the purpose of the power of selling options. It's a long, patient, but in the end, you win. Here's another example. 945, you get this, bull puts, easy day. So the days are either going to be super easy, choppy, or it goes into your credit spread a little bit. And that's why having a stop loss at 25 cents is really nice. It just helps, you know, it buffers it out, because any price action that goes against the buyer, they get wrecked, okay? You know, if price goes against the buyer some, they absolutely get wrecked, and you'll win. This day right in here, I'm not sure what happened. This one right in here, I think, yeah, this day I think I lost due to the fact I didn't get in early enough. Right in here, you see bear calls. Yeah, if I would have gotten in early enough this day, but let's say you lose on this day, no big deal. You do 2 times the size, and guess what? You win on this day, and this day you win. Easy, easy. And then you start normal, and you actually make money on the second day, and you win here again. The win streaks are really good. I've seen win streaks that go way over 5, you know, easily in a row. So that's why I like to go a little more size. And sometimes they can go even higher, but you're going to get a loss here and there just depending on the environment, and that's totally fine. So hope you guys enjoyed this video. This is the do's and don'ts that I'm doing. This is exactly how I'm doing it. You don't even need the EMAs, the Keltner channels that I have on here. You can use just basic price action. Just here's your 15-minute candle, put the highs and the lows. Bear calls or bull bear calls if the price is under the 945, bull puts if it's over the 945, and look for a strike. You don't even have to look like at the strike. Just literally go to the option chain and look for 6 cents. You can see right here, 6 cents is on the ask, so I can hurry up and or look at or hit this on the bid here, so I can hurry up, go to sell side. I can say, okay, I can get in this right now for 5 cents. I don't even have to look at the strike, because I know this is so far out of the money just based on the premium. If the premium was higher, then it'll go more towards the end of the money. So, and that's really how you can do it. And what this one right here, you can see that's 594, 595. That means price would have to pump $12 to hit me on this strike. There's a lot of buffer here. There's a lot of, you know, this is really nice. In my opinion. But you'll always look at 0 DTE, because the purpose of this strategy is to make money every day. That's the purpose, okay? It's the best way how I can describe it. It's the best way I can... I really think we're on a system here. Nothing is perfect, but I can tell you this is the best strategy for long lasting in the market. If you want to be a buyer in the options and you want to make massive money, this is not the strategy for you. If you want to stay in the market, be consistent, and be like, okay, 1,000 turns to 2,000, maybe a month and a week, and purposely you should be doubling the account at least in a month and a half, in my opinion. And you can see you really start snowballing. Whereas a buyer, their profit curve will look like this. It goes up, and then it goes lower, and then it zigzag. It's a mess. there's no consistency at an all-in buyer. You can never say I'm going to make $100 a day. That's my profit. You don't know that. You have no guarantee at all. If anything, you're going to lose as a buyer. Whereas selling credit spreads, I can realistically say if I sell 10 contracts, I'm going to make $50. I'm exactly going to make 50 or I'm going to lose $150 with this strategy. And that's the purpose of this. And I showed you many times how often you're going to win. So you're guaranteed to make some money if it works. Whereas a buyer, you're not guaranteed anything, okay? Over 90% of buyers, they lose. Day trading is a super hard. Over 90% of buyers will lose, they quit, and the options at 0DT expire worthless all the time. If I actually had the courage to hold all of these, I actually wouldn't lose a single trade. So that just shows you that all these options will expire worthless, but I don't want to be here. I don't want to encourage any of that. Have a 0.25 stop loss. That's about 300% stop loss, and that is the golden zone for this. All right, I don't want to make this video too long. I'm just really hyped about it. I love talking about this strategy. I've been doing a lot of research, been playing it for a while. It's been over a month, and the account has definitely grew. There has been little bumping stones because I have been doing kind of some stupid things. Like I want a little too big size. I think 2x size is the best after you get a loss. I think you got to pay attention to the forest factory category. Look at the economic calendar. If there is any news that with a red folder, you have to wait, okay? You have to wait. We don't play anything at 2 o'clock. If there's any red folder at 2, just don't even play. You take the day off because the price actually can be very choppy and go drastically one way. So with selling credit spreads, you want to be very boring. You want just price to be like this. You don't care, right? All right, guys, I'll upload this in the day trading education videos here. This is exactly how I'm doing it. Nothing's changing. I'm always selling at 6 cents. I'll tell you guys if I do sell at 5 just to get in a little earlier, but 6 cents is kind of the sweet spot. I recommend just waiting for that. But sometimes I get in 5 and then I'll add more at 6. But that's the purpose of this video, is to make passive income every day with less risk. And you really don't need that lot of money. $1,000 is making you $50 a day. That is really good. That is insane. Okay, and it's a very low risk strategy compared to what other 0DT strategies you're going to find. If you have any questions, let me know in the Discord. I know this is a more confusing strategy, but I don't think it's really hard to learn. You just got to get your hands wet. You will need a higher level option. For Schwab, it's level 3 options. It only took me a day to get. If you need help answering questions, I'll be there for you guys. And then post screenshots in the chat. If you're in the day trading chat, just post a screenshot and be like, hey, is this the right credit spread I should be selling? Is this what I should be doing? I'd be glad to help you guys. All right, guys, thank you so much for watching this video. Give it a like, subscribe, comment. If you are new to this channel and you're actually coming in from YouTube, do look to subscribe. I'll put the link down below in YouTube comments below to join the Discord. It'll say join the premium Discord for my alerts and system. It'll take you to this free chat landing page. If you want to become a member, just hit Day Trade Alerts. That's where I'm going to post all these things, and you'll get access to everything for only $12 a month, and all these channels will be unlocked. All right, guys, happy trading, and I'll see you guys in the Discord. Peace out.